Hello everyone, I've got an awesome video for y'all today with some very relevant information. The topic of the day and of the last month has been tariffs, Trump tariffs, what the impact is, whether or not we will survive them, and whether or not they will collapse global markets. They pretty much did collapse global markets. Oil absolutely plummeted in anticipation of just reduced economic activity, and it wasn't pretty until today. Trump sort of backpedaled and delayed those tariffs for 90 days. Markets rejoiced initially, and then today again they sold off. So ultimately, what is going to be the impact? Are tariffs the right idea? And if not, what actually is the right solution? What is even the problem in the first place? So the problem, I'll just keep it short and sweet. The problem is ongoing and increasing trade deficits with basically everyone that we trade with, but especially China. And what this has led to is foreign entities, foreign countries, purchasing our sovereign assets. And it's eroding our sovereignty over time, and it does not set well with a lot of people. It is genuinely a problem, but how did this problem develop? Is it some sort of grand conspiracy? No, it is not a conspiracy. I will explain it. We got to go back in history 50 years, into World War II. World War II, there was a lot of destruction, a lot of death, a lot of bombs falling and blowing up facilities, basically manufacturing devastated worldwide, except the USA. We were exceptionally well positioned to supply the world with all the goods that they needed. And so we did, and we made a fortune in the process. We had a trade surplus from the end of World War II until the 1970s. What changed in the 70s? 1971, we left the gold standard. 1973, the Bretton Woods financial system collapsed. And basically from that point forward, we were able to print as much money as we wanted to. And the consequences of that have been devastating. So let's take a look at this. This is a chart of U.S. net international investment position. Here, the black line here is the zero line. So the position would be zero if, for example, the U.S. in a given year purchased $1 billion worth of foreign assets and foreign entities purchased $1 billion worth of American assets. They offset, takes us back to zero. But what happens when we purchase $1 billion and foreign entities purchase, $100 billion? Well, then we would drop below the zero line and it would be negative. They would not offset each other. There would be a net purchase of foreign entities of our sovereign assets. So this has been happening now for 50 years. This chart shows, 1976 until modern day. Now this chart is in millions of dollars. So right now we're sitting at $26.2 million, which means $26.2 trillion. Foreign entities own $26.2 trillion worth of our previously sovereign assets. That's not good. That means they're accumulating influence in our country. They're buying our real estate. They're buying our bonds and treasuries, which is good for us. It helps finance our government. We need that now more than ever. But they're also buying our companies and shares of the publicly traded companies on the American stock markets. So they're accumulating a lot of our assets and the influence that goes along with it. But where did the money even come from for them to buy all of these assets? Did they just print it all? No, they did not. It came from our trade imbalance. So we buy a lot of goods from China. There's a large trade imbalance. We import far more than we export. So we are exporting a lot of dollars. So I'm going to use China as an example. We give China hundreds of billions of dollars per year. They give us stuff. We consume that stuff. Stuff is gone, within the year generally. But the money that we give China, it doesn't evaporate in the same way that our consumer goods evaporate through consumption. They have to do something with that money. They're not going to just sit on cash and watch it evaporate to inflation. That would be highly irresponsible of them. So that's why they invested as responsibly as they can, buying our real estate, our assets, whatever US dollar denominated assets they can get their hands on that they think will appreciate over time, or at least insulate them from inflation. But as you can see here, the consequences of that over time have been pretty catastrophic, and there's no way that we can easily just dig ourselves out of this hole. So let's go ahead and take a look at our next chart here. This is the gross federal debt. This is from 1940 to present day. And notice, as federal debt goes parabolic, our negative international investment position goes drastically negative. It's not quite a mirror image, but it is similar. So I think the parallel that we can draw here is, as we print money out of control, it's not staying here domestically. It's going overseas. You can see it in our net international investment position. So I have a theory. Look at the S&P. This is a historical chart. It doesn't go back very far, only 1995. But it's been going parabolic. As we printed money, the stock market has gone parabolic, out of control. Previously, I didn't think that it made sense. I really didn't, until I looked at these other charts. And I thought, okay, as we're printing money, it's inflating the markets first. But who is actually buying those assets? Again, this is a theory. I haven't proven this 100%. But I think a significant purchaser of those assets is China and other foreign entities. And I'm a little bit scared to see how this plays out long term. In fact, I don't want it to play out much longer than it already is. We need to find a solution to nip this in the bud before it gets out of our control, out of the Fed's control. And I have 5 solutions for that. Number one, so if we're looking at gross federal debt, and it is pretty clear that as we increase our debt and spend out of control, that money is flowing overseas and creating issues. What if we simply reverse that process? This is not complicated. We don't need tariffs. We don't need force. We don't need to force higher prices on American consumers. We don't need to force China to adjust their processes and adapt to all these tariffs. We don't need that. We just need to be responsible with our fiscal policy and with our spending. Now, when I say that, I understand the implications. Easier said than done, right? I mean, it's highly politically unattractive to reduce federal spending, because that's going to mean, reducing or eliminating programs and breaking promises that we've made to the American people. It means, instead of taking the coward's way out and financing everything through inflation, we may have to raise taxes. That would not be my first solution. I think we really need to reduce spending before we increase taxes. But long story short, that's not an attractive solution. It is a good solution, but not a politically attractive solution. Therefore, it has an extremely low likelihood of even being entertained as a real solution. Next, we need to return to sound money. Actually, number 2 and number 3 go together. We need to return to sound money, but we need to eliminate the Federal Reserve, because the Fed is the great enabler. They really are. If it wasn't for them monetizing our debt and passively permitting our out-of-control spending, we would have to figure out a different way. Inflation could not be the infinite cop-out that our politicians resort to. We would have to actually balance the budget, actually reduce spending, stop making promises that we can't fulfill. So returning to sound money and eliminating the Fed, they really go hand in hand. This probably means eventually returning to a gold standard. As of now, we simply can't do it. There's too much money in circulation, too little gold, and we don't have a way of getting our hands on more gold. Look at the price of gold. It's already skyrocketed to over $3,000. We have such a little amount in Fort Knox. If there is any even there, the amount we would have to acquire would push it up to I think I heard Peter Schiff give an estimate. It was like $50,000 or $60,000 per ounce. We can't afford that. Nobody can afford it. We can't return to a gold standard immediately. It's not a simple solution, but over time we need to. This fiat system is killing us. I'm afraid it's going to end up in some sort of fully electronic currency, which really reduces our freedom of spending and our privacy. I'm not going to get into that now. Let's move on to number 4, which is we need to entertain some real negotiations instead of throwing tariffs at everyone and trying to force them to just bow to our wishes. We need to actually figure out what kind of goods we can offer other foreign nations in exchange for the goods that they offer us, instead of only offering greenbacks. This is probably the best sustainable long-term solution that we can come up with. The problem is it will also take time. We don't have the industrial base for that anymore. We have to build it up over time. We're looking at probably 5 to 10 year time horizon, but we need to start now before the crisis gets out of control and all of our capital dries up, or what little value is left in our currency completely evaporates and we get to hyperinflation. We have to fix the problem now before it comes to that point. And that brings us to solution number 5, which is we have to voluntarily build up our domestic manufacturing. I think what Trump is trying to do with the tariffs in part is force Americans and foreign countries to build up American domestic manufacturing, but doing it by force is not the right way. We need to do it voluntarily, just in an effort to manage our economy and our financial situation responsibly. This also will be pretty difficult. It'll cost a lot of money, and I mean, I don't want to be the first one to build a manufacturing facility here in the U.S. Who knows what the future holds? Whoever takes that bullet, so to speak, they're going to need some sort of assurance that their investment will pay off. And given the current political landscape, that assurance is not there. So that's a whole nother issue that I don't know how we fix. It probably will involve stop talking about tariffs, stop imposing tariffs, stop making threats, and just, in fact, we should reduce tariffs and actually get back to some sort of a free market economy. I think that's the best way. So there you have 5 pretty decent solutions. Reduce federal spending, return to sound money, eliminate the Fed, engage in some real negotiations for some real products that we can exchange, and voluntarily build our domestic manufacturing before we end up going the way of the dodo bird, or we're forced to do it under someone else's terms. All these solutions are better than trying to achieve this through force, through tariffs. Now, it's entirely possible that I'm imperfect and my ideas are imperfect. So I would love to engage with you guys. If you want to leave a comment, a question, something like that, let me know. I'd be happy to discuss it. There's a lot to unpack here. There's a lot to discuss. My perspective is, probably not as broad as it should be, but I think we've covered a lot here, and all these solutions are better than just straight tariffing. Tariffing has proven it's demonstrably destructive to the country that imposes the tariffs. So we cannot go that direction. And the stock market, the way it has traded on the tariff news, the proof's in the pudding. Like you already know, it will not be good. It will reduce global economic activity and probably, if not inevitably, cause a global recession, if not a depression. Let's avoid that and just do this responsibly. It won't be politically attractive. I don't know that it's politically feasible, but we have to try. We have to start off in that direction. Let me know what you guys think. I hope you enjoyed the video. Until next time, peace.